Saving in a 529 plan for a child or for a grandchild has become more attractive due to recent tax law changes. Today, I'll explain two such advantages that you must know if you are thinking 529 plans. Hi, my name is Vid Ponapalli. I am the founder of Unique Financial Advisors. Let's get started. First of all, before the year 2017, if you took a distribution from your 529 plan, you could use the funds only for your child's college education in order to get the benefit of tax-free and penalty-free of the earnings portion of your 529. The Tax Cuts and Jobs Act that was signed into law late 2017 has changed this. So starting in year 2018, if you take a distribution for your 529 funds, you can not only use the funds for your child's college education, you can also use them for your child's private school education from kindergarten to 12th grade. Yeah, there are a couple of points to note. The maximum amount of distribution you can take without taxes and penalty is $10,000 per year per beneficiary. Yes, that's right, per beneficiary. So if you have 529 plans for multiple beneficiaries, you can use multiple 10,000s. So if your private school education costs 15,000, you are only you can only take 10,000 without having to pay the taxes. The second point to note is, unfortunately, not all states conform to this law. You can look up the list online for which states conform to this law and which do not. But if you live in a state which does not conform into the law, what you need to know is you still get the federal tax break on the earnings of the 529, but you will not get the state tax break for the growth. So the real point is, if you are thinking to send your child to private school, the 2017 Tax Cuts and Jobs Act has given you an opportunity to save in a 529 and use the funds up to $10,000 per year to fund the private school education. A second advantage comes from the more recently signed Secure Act. Before the Secure Act, if you took a distribution from your 529 plan to pay off a student loan, you are liable to pay the taxes and the penalties on the distribution. Secure Act has changed this. Now you can use 529 distributions to pay for the student loan. In fact, this is very advantageous if a grandparent is saving for a grandchild's college education. Here is how. Typically, a grandparent-owned 529 plan, when they take a distribution to pay for the grandchild's college education, it is considered as income for the grandchild. And the student, when he or she applies for financial aid, they are expected to pay 50% of the income before the financial aid calculation kicks in. So, taking a distribution from a grandparent-owned 529 is disadvantageous for financial aid eligibility of the student. So, with the Secure Act allowing paying 529 funds to pay off the student loan, now what the grandparents can do is let the grandchild take the student loan during the college years, without grandparents taking the distribution. Thus, they are eligible for the financial aid. Now, when the grandchild finishes college, grandparent can take a distribution from the 529 and pay off the student loan. So the grandparent is not taxed for paying off the student loan, and the student did not get its financial aid ability was not impacted. Hope this all made sense. For more financial tips like this, please subscribe to my YouTube channel or follow me on social media. Thank you very much.